Hey guys, how you doing? Alvin, uh, 415 PAA is the inspiration for this presentation. Sent me a text and said, "Dog, I know you're in Amazon. I'm not, but I was looking to get in. As you can see, I have a position now, and I want to show you how what would cause me to get in. Um, I have my moving averages, my EMAs. I have some Fibonacci retracement and where I think it can get to in the future, Fibonacci extension. You can see I have the squeeze set up, and it was in a downward momentum really since back here, and I have reason to believe the oversold, right? Because that's what this is. This is just notice this line facing down. That people there were more sellers than buyers, so the overselling um, brought the price down, and now the Ready Aim Fire is saying oversold has exhausted. You can see the line is starting to head up. I got the arrow. Um, and now there may be some opportunity to the upside. I want to introduce this ATR, which is the average true range. And what this is saying is this is the movement that the stock can do in a 14-day period. And you could see, let me just bring it all the way over here to today. You can see that based on today, this stock can move 117, almost 118 points in either direction. My analysis is saying there's an upward trend. So a lot of that I'm expecting to move towards the upward side, right? So let's show you how I structured this trade. John Carter would like to he would like to take positions that have a very favorable high risk reward, a good chance of being able to be successful. So when I'm going through the October 16th option chain, and the implied volatility gives it a 47, almost 48% chance that the stock, which right today is 3019, could move, can either increase by 286 points or decrease by 286 points. I want you to keep in mind the stock is already up another almost 25 points in post market. So the 3010s are I thought was just not realistic. So here's the 30, which means for every dollar of movement in the stock price, the here is the movement. It's a 30 cents movement. For every dollar, there's a 30 cents movement in the option chain. And if I didn't say that right, guys, I'm still on my Neo profile, Neo Commandant duties. So if I was to follow what John Carter said, he's got a 30 is 30. It means I would be buying a 3230, and at the same time, I would be selling the 3550. Buying the 3230s, I just think is a little bit. It's just a little bit much, right? Because 3230s, that's 220 points, right? Or 200, yeah, 210 points. I know the stock can go 117 in 14-day period, and I know there's a chance it can get there based on the fact that this option chain can move almost 300 points in either direction. I would be more comfortable structuring this trade using his principle, but structuring this trade as a instead of 30-20, a 40-10, a 40 instead of a 30-10 delta, to use deltas of 40-20. Same principle, but it's a little closer to where we're at today. So a 40 delta would be buying the 3140s and instead selling the 3350. So if I was to do that, you would see that. Let me go to the 40. Edward Murray, you're not doing this right. Hang on. Okay, sorry about that. So I'm going to do a vertical, and I'm going to say I want to buy the 3140s and sell the 3350s. So you can see that's a $5,000 trade, right? And it's already up in post market, so I'm not going to get it at this low price. I'm going to just put it in the middle. I'm going to say somewhere around 5120. That's a bit pricey, but what is this? Look at what this trade does. Oh, you know we ain't buying 10 of these contracts. So what this trade does is it says, if I spend 5,100, I got a chance to make 15, almost 16,000 if this stock gets to 33.49. 33.49. That's you're not. You know you're not going to get there, right? But I'll take 70% of that. So if I get $12,000 out of this, if I invested 5,100 and I get $12,000 out of this trade, I'm happy. So I've set this trade up and I put it in here. I set it up. Here's the trade here. One Amazon 3140, 3350, and let's hope it's filled. Root to the Qs.